What's going on, traders? Let me know if you can hear me. Let me know. Can you hear me? Oh, perfect. What are we saying about that intro? Sounds good, man. I'm a happy man. Guys, it's nice to have you on with me. Clear and loud, baby. The music, bro. I haven't been on live for a hot minute. I'm not gonna lie. So it's nice to be on and have a little chat with you. Guys, hit that like button for me as well if you can. So as the title says, talk to me about how your year has started. I just want to know how things are going for you. I've been speaking to a few of my students, and they found that January has been a pretty difficult month. Not for everybody, but some people have been struggling a little bit. And not so much with having a negative month, but more so with the way they've perceived their month. Anyway, before we take some questions here, I just want to talk about this trade for you guys. I thought, why not? Let's talk about it, because it was a pretty decent trade. So, I mean, if you look at this trade here, it's probably very simple to identify why I've taken it. By the way, anybody who is on, I will go over the 10 pairs that I usually go over as well, just to help you out before the pre-New York Open. So it'll be like an outlook and setup session as well. But this trade here was a pretty decent trade. I'll be honest with you. Before I look at any patterns, I'm trying to identify what's happening on the 4H time frame. I mean, that's my go-to time frame, to be brutally honest. I heard there was something that happened with the dollar recently. I can't remember what it's called. I don't want to say it on YouTube, because then somebody would clip it and go paste it somewhere and be like, that's your mentor, doesn't even know the word. But I know there was something happening with the dollar recently, which created some positive vibe around it. Hence the reason why we've seen the strength and the market moving bearish here. So my observation of this market structure is just simply that the market was down. Pretty simple, I guess. The next thing that I identified was this level here around 34.90 where price was holding. So imagine this. All I'm thinking about in the back of my head is that the overall momentum and shift in the market is bearish. We currently have an area where price is potentially creating a lower high. And what I want to see here is a shift in the direction that I want the market to go, which is bearish. Okay, so what happens at this stage? It's really difficult to show you this on TradingView because we can't replay it in real time. But what I was looking at was GJ as well as a confluence, and what I want to see on GJ is that the behavior is reflective. So if the current 4H candle is pushing bearish, okay, on GJ, then I also want to see the same behavior on GU as well, that the 4H candle is pushing bearish. Now make sure you're taking notes here. I'm sharing something with you that's really valuable. Okay, this is super valuable, and it will help you no matter what time frame you're trading. So imagine this. I'm looking at Great British Pound JPY, and then I'm also looking at Great British Pound USD. Whoa. Great British Pound USD. Okay. So if the 4H candle, which is my go-to higher time frame candle, if my 4H candle is pushing bearish on GJ, and then I can see the same sentiment on GU, then I know that I'm going to be on the right side of the market sentiment. When I say market sentiment, I mean this information here. Okay, this is the market sentiment. So what that will illustrate to me, as long as GJ 4H candle is pushing bearish and GU 4H candle is pushing bearish, then what that illustrates to me is that there's potentially a weakness in the pound. Now, if it was the opposite, and I saw that pound JPY was pushing bullish on the 4H and GU was pushing bearish, then I'm very unlikely to take a sell. Very unlikely, because I need high probability trading setups with the most amount of confluence that I can add to that trade. And when I talk about confluence, I'm not talking about 2 confluence, 3 confluences. You can have as many as you want as long as they make sense based on the scenario that you're about to trade. So if GJ was pushing bullish but GE was pushing bearish, I'm not then going to bank on USD being strong. Even if I looked at Euro USD and saw Euro USD was pushing bearish, it still wouldn't make it a viable trade for me. What I need to see in order to take this trade is that everything lines up. So I'm looking for the weakness in the pound in order to sell GU, or vice versa. So when I identified that GU was failing to make new highs, I was also identifying that GU was pushing bearish on the 4H. So this was a new 10 o'clock candle, and then GU was doing the same. That was when I decided to take this trade. So I went down to the 15-minute time frame here, and then this is when I start to look for my patterns. So I'm not scaling down to my 15-minute time frame or my entry time frame to look for patterns to then validate my high time frame behavior. I'm looking to validate my high time frame behavior first, and then the patterns that support that. So now I have that in the back of my mind. I come down to my 15-minute time frame. Doesn't matter what time frame you're on, and I can identify here a level in the market where price has created some sort of lower high. Now I just want to make sure that you have this in the back of your mind. The current status of the market is bullish during this phase, which means I'm not looking for sells. What I need the market to do is create a level where price is showing signs that it's not breaking above or making new highs. That then indicates to me that the bears are potentially taking over the markets, and there's a very high chance that the market will continue bearish. But I can't just sell it there, because at this moment in time I have no confluences to add to this. And granted, we're moving into the next session as well. But what I need to see is that price leaves this area so that I know that this is an area where price is reacting to. Okay, now these are all confluences that I've built up over my 10 years of trading and 5 years of finding consistency with my trading. This may not be the same for you, so I just want to make this very clear. A lot of traders will not have the same narrative and the same outlook on the market, and that is completely fine. You have to use what works for you, and this works for me, and it makes the most amount of sense. So now that I've identified that the market has left, I've not identified this before. I've only identified this once I've got my higher time frame bias. So now I have the beginning of my story, and now I'm working on the meat of my story. Okay, so that's where I'm at. If once I start to work out the meat of my story doesn't line up with my higher time frames, then I just can't take the trade. All right, but I've got to make sense of this. So I know that the higher time frame is down. It doesn't matter what the structure looks like here. I just know that the higher time frame is down. I need to identify the shift in behavior, which is this bullish behavior turning bearish again. I then need to identify a level where I can identify price not breaking above, which is an indication to me that the behavior is depleting in the bullish sentiment and now turning bearish. What we have to be careful of, traders, is that we don't have this intraday trend that is pushing bullish, that makes the higher low, that makes the new higher higher. So what we need to identify is price doing two things. It comes back to respect the previous structure, or it starts to make new lows and lower highs and starts to take out structure that now represents a bearish sentiment. In this instance, what the market did was come back to this key level. Now again, at this point, and I want to make this so clear to you guys, I really want to make this so clear to you. At this point, when the market is making this double top, okay, so from this point here, when the market is making this double top, look at the time below. Here is 9:15, which means that the current 4H candle is going to be closing in 45 minutes time. That means that there is no way I'm going to be taking a trade on this 4H candle, because that candle was probably bobbed up and down and done whatever it had to do during that phase. I need to be patient and wait for that 4H candle to close. And then I can take advantage of the new 4H candle when it opens. And then what that means for me as a trader is that once that new 4H candle closes, if the sentiment is lined up with GJ and all the other confluences, and I enter the trade, I can take advantage of that 4H candles range. But if I take the trade at 9:30 or 9:15, when the candle's about to close in 45 minutes, granted it's a double top pattern, but that previous 4H candle has now been open for 3 hours and 40 minutes, and it's done this. Which means at this moment in time, there was no volume, there was no reason for me to enter this trade because nothing has happened. So I wait for my new opportunity. Now the candle decides to close, and what I'm looking for is a shift. What shift am I looking for? I'm looking for the shift bearish. Now this is the new 4H candle open, this one here. As that candle starts to shift bearish, I now double check very quickly. Is pound JPY moving bearish as well? If it is, we have a confluence. I then check my 4H time frame on pound USD, and as long as that 4H candle is also pushing bearish, then now I have two confluences. All the hard work that I'd done pre-entry was identifying that the structure was bearish on the 4H, the behavior on the 15-minute was bullish, the behavior bullish is depleting, there is a sell sentiment stepping back into the market, price has now created a behavioral pattern which is called a breakout break back in, and now we can see the shift in momentum which is bearish. Now that explains why my entry is down here and not up here, because the behavior from this point to the left was all part of the previous 4H behavior. But anything to the right is now part of the new 4H behavior, which is now shifting bearish. I have all my confluences that line up, and now I execute the trade. The idea is that I put my stop loss above the 4H candle because it's created what I believe now to be the high, and that then means that I have a conviction and belief that the market will continue bearish. So I entered this trade, it started to move in my direction, pretty gassed at this stage, price came back, it is what it is, this happens. And then eventually what happened? The market decided to continue shifting bearish, and I was able to take 2 hours out of the market. In this trade, I was concerned about this level here, but at the same time, I'm also anticipating that that 4H candle will close bearish. So I went for a 2-hour trade with a 15 pip stop loss and a 30 pip target, and that would explain why this trade has been taken. So I know people are going to be in the comments like, that was a late entry and everything else, but let me just tell you something. You can waffle on about whatever you want to waffle on about respectfully, but I have a process to enter my trades, and every single one of my trades based on my understanding of the market, my understanding of structure, my understanding of patterns, my understanding of behavior, and then I execute the trade. It doesn't matter whether it was, in your opinion, a late entry, the best entry, a sniper entry, your order block entry, your stop hunt entry. I couldn't give two flying whatever. The point is, I decided that this was a good trade to take. I accepted my risk. I executed according to my plan, and I won the trade. Okay? We don't want to get too technical about who's right, who's wrong here. I made money. And this is how I make money consistently through this process. So I'm not going to be debating with anybody who thinks they're smart in the chats. That is the process of this trade. Okay. So let's scroll up a little bit and let's see if we have any questions here. If you want to send your charts, feel free to do so. I'm sure there's a way to add them on. I think you have to send me this thing here at the end, this part, and I can take a look at it for you if you want. Justin Nelson, in my biggest drawdown right now, slowly clawing my way up. I like that word, Justin. Slowly claw your way up, my friend. You know, one thing I just want to say to all of you, we are literally, and I mean literally, into the 4th week of the year. Okay? You don't want to evaluate your current situation based on 4 weeks of you making New Year's resolutions or whatever it may be, and then saying to yourself or doubting that you're not going to be able to continue to grow for the rest of this year. Justin, I've seen the strongest of traders with the strongest of mindsets crumble because they do not focus on the long-term results. All you have to do is evaluate where you are right now, stop trading, figure out what's got you to this place. If it is the market, then that is fantastic, my friend, because you had no control over it, and that is just a reality of trading. But if you really stop and evaluate your situation where you're at now, Justin, and you realize that your behavioral patterns are the reason you're in the drawdown that you're in, then you've got things to work on, which is a beautiful thing. Because as long as you're continually growing, you will at the end ultimately succeed. But if you allow it to hinder you, to distract you from the process, from following your plan, from chasing, from doing whatever you have to do, then that's when everything's going to start to demise. Okay, so think about those things. Talk to yourself, look at your trades, evaluate your situation. First things first, accept we had just started the 4th week of the year. There is a long way to go. First year of trading, agenda. It's been a good experience. Good 6-6 this month, 100% for 2022. Well done, Domi. I would say it was just some confusion to transition and get mindset with new knowledge. Listen, man, any new knowledge that you take in is always going to be confusing. That's why you have to just keep digging deep, reading the same thing over and over again, doing your research, and spending as much time on it until it starts to make sense. It will make sense. It's a guarantee. When, I don't know, but you have to just keep digging deep, and then the answers will come to you. Because a lot of people out here think that it's all about technical analysis and finding the perfect trading strategies and figuring out how to get the best entries and where's the best place to place my stop loss and how much should I risk and what formulas and algorithms should I use to get the most out of my trading. Nothing to do with that, my friends. I don't want to break the bad news to you, but there's nothing to do with that. Unless you figured out who you are, why you're doing what you're doing, and what it is you want to get out of what you're doing, you're not going to find any success. I appreciate you, Nature Sounds. Thank you so much. Have you bathed just now? No, I didn't bath just now. When did you find your consistency? About 5 years ago. Probably leading on to 6 now. US 30 and NASDAQ, that's not me, my friend. Did you find last month I downloaded? Oh, you're a joke. When did you? Okay, I'm not going to answer that question anymore. When did you find time and knowledge next level? Okay. Tick charts. You know what? I've used tick charts before in the past. I think they're absolutely amazing. But look, to be honest with you, you just have to use what you're comfortable using. Some people like tick charts. Some people like line charts. Some people like candles. I don't know. Just find what you're comfortable with. George, thank you. I appreciate you on the session, bro. Find what you're comfortable with and then just work at it. I joined and after a month found my feet. Joshua Netty. Make it so simple. Okay. Okay. When did you Eureka? That's a really late entry in my opinion. Luca, man, focus on your journey, bro. Stop worrying about mine. Because believe me, your comment really has no impact on me at all. Just focus on your journey, my friend. Absolute goat, keep up. Thank you. Okay. These questions are really repetitive. Yeah. So, Anchor, my favorite currency pairs that I trade are pound USD, pound JPY, and gold. That's what I focus on. Still inconsistent for 1 whole year of backtesting. Any advice? Seek some help, Carlo, man. Look, if you can't find the answers yourself, then seek some help. Speak to a friend, speak to fellow traders, find a mentor. I don't know what it is. Sometimes you need somebody to point something out for you that you probably are just overlooking, and I'll be honest with you, it will be something so simple. If you can't find the answers after a year, then you're probably not digging deep enough. That's the honest truth. Hi Rox, I would like to be part of your live sessions. Where do I go for a link? It's always in the description. My Kobe Nelson, I appreciate you, my brother. 1 month in your academy and I'm already profitable. I'm searching for consistency now. Isaiah, that's the one, baby. You know, just the consistency is all down to you. If you found profitability in your trading because you have a good plan and a good concept, then the rest is down to you. Okay, so Vincent, that's a really good question. And this is the reason why traders probably don't find or get the results that they're looking for, is because they cannot understand the connection between higher time frames and lower time frames. I'll be honest with you, when I first started trading, neither did I. But when I started to realize that it all derives from one candle, whether it be the monthly, weekly, daily, 4H candle, no matter what time frame you're trading, and you start putting in the work to identify levels in the market, how those candles are moving, etc., then I'm telling you, that's when the game is going to change for you. But you just got to work at it. Am I going to share that on this session? Probably not, but that is probably one of the things that I will recommend to every single one of you who are listening now. If you are not finding consistency with your high time frame analysis and lower time frame analysis, then you need to start learning how to connect the two together. It's about patterns and processes, and once you can connect them, then the world is your oyster. It doesn't matter what time frame you trade on. It is all the same thing. Structure just becomes structure, behavior becomes behavior, and that is it. You know, everything will start to take off. Again, the final part of the puzzle is all down to you, your patience, your discipline, and your commitment to following your plan. I mean, that everything else is pretty easy. How do you bounce back after a hard time? Well, to be honest with you, you know, for me, I've had no choice but to bounce back, because I've always had a comparison in my mind where I've been and where I want to be, and that is one of the things that I would recommend to every single one of you. And I've done a session on this with my students about what is your story, and we went through a session. It was about an hour and a half, hour and 40 minutes, where I really opened up and spoke about how you can transform your life in terms of your mental state firstly, before you even try to become a trader. And one of the things that we spoke about there is having a vision. If your vision is not clear, is not powerful or impelling enough in terms of where you want to be in the next 2, 3, 4, 5 years, for all the right reasons why, then when you're going through hard times, you are naturally going to give up. Because what most of you are doing right now is you are doing what you're doing without any immediate results and nothing tangible to basically reward you for all the hard work that you're putting in, with all the negative results that you're getting out. So for most people, because they come into this with the mindset that they will be able to accomplish great things, achieve financial freedom, pay for their mum's home, get out of debt, leave their 9 to 5, that becomes their core focus. And then when they don't achieve the results because they've just put in 10 hours over the weekend and back testing and got a 70% win rate with a 30R return, and then they come back the following week and they can't replicate that, that's when things start to go downhill. But if your vision is big enough and you can see yourself where you want to be before you even get there, and for all the right reasons why you want to be there, for the people you want to help, for the lives you want to change, for the things you want to accomplish, anytime you go through those scenarios and you're feeling down, you're feeling anxious, you've lost confidence, you can always stop and reflect back to why you're doing what you're doing. And if it's powerful and compelling enough, then that will be the reason why you get back up. Most people don't have a compelling reason as to why they're doing what they're doing, and that's why they're not getting results. For me, I have no choice. And when I talk about certain things on TikTok and I do certain things in terms of changing my physiology, in terms of my mindset, I do it because I have to. Because not every time do I feel motivated to go to the gym. Not every time do I want to walk away from my charts after I lose a trade. Not every time do I want to walk away after I'm 3R up and price comes back and hit me out of break even. You know, I'm no different to you guys, but I also know at the same time that if I don't do it, then this is going to be the outcome. And that scares me more than anything else. Thinking about myself in a position where I've been before and where I don't want to be if I lose momentum and I don't pick myself back up and continue moving forward. Because my dreams, because my aspirations, because my wife, my son, my family's future, their security is so more important to me than the immediate results that I get out of what I'm doing. When I feel like I've fallen down, or I've made a mistake, or I've hit a brick wall, that is the point where I decide and I say to myself, this is when I need to keep going. Because everybody stops when they feel that things are getting hard and tough. But for me, I know if I do that, I'm just going to be like everybody else and I'm not going to get any results. And that is not, I mean, I'm not going to go into too much detail about it now, but that is what keeps me going. So if you're feeling like that right now, then you need to dig deeper. I'm just not going to lie, guys. All this stuff that you look out on YouTube and Instagram and TikTok, it looks freaking amazing. Of course it does. But if you want to achieve that, you got to put in hard work. You've got to be patient. You've got to be disciplined. You've got to be consistent. That's all you need. Those 4 things. And if you think about those 4 things, which one of those things actually apply to technical analysis or your entry technique or your stop loss placement? None of them. Everything you do, you're accountable for. And once you start to accept that, I can promise you things will change. Some of you might hear, oh, all these gurus and motivational speakers talking about the same thing. I'm telling you, the reason why they are is because it's the truth. There is no shortcut. You can't pass your funded challenges in 10 days because somebody else showed you on YouTube that they passed it. Little do you know that they've probably tried to do it 5 times in a row before they posted the one that actually worked. So you have to get your things, I'm trying not to swear, but you have to get things into perspective. Do you understand? It will take hard work. It will take blood. It will take sweat. It will take tears. You will have to be super patient, super disciplined, and you have to be prepared to be consistent every single day without let up. It is easy to achieve anything you want if you're consistent daily, but the minute that you start to allow your mind to take over because you've had a little pitfall, then that's when you're just going to be in the same category as everybody else. Just give up. So pick yourself up, man. Find your real reasons why you're doing what you're doing. Stick them on the wall. Stop putting your cars and all your Ferraris and Rolex watches. Put something up there that's real. Put a freaking coffin and say, I don't want to die broke. Whatever it is, you have to make sure that it's motivating enough so that you can keep pushing forward, okay? What is your opinion in the new trader? How many years? Wait for the consistency. Wrong question. Just enjoy your journey. Well done, bro, for all your work process. I lost that one, sorry. Damn. Oh, sorry guys, I just skipped loads of questions. Let me just keep going. How to deal with your losing streaks. Oh well, I think I just covered kind of that. Bro, working nights in the UK sucks. Missed all the opportunities today. Yeah, you missed them today, but you can come back tomorrow, my friend. There's always another day, man. Please and kindly produce a video on how you can connect high time frames. Okay, I will. Intrusive values you're talking. Okay, thank you. Nature sounds. Thanks, Rox. Keep up the good work. Oh, I just skipped loads more. Hi, Rox. Huge fan. One question: how do you fit training into your daily routine? I wake up at 5 o'clock. I leave my house at 6 o'clock, and I'm in the gym at 6:28. That's how I fit it in, and then I start work around 8. Wake up early or go bed later. Whatever the case, you have to make sacrifices. Yeah, Tracy Walker, the markets were very rangy this morning, and this sell that I took on GU is not my conventional trading approach, but because of the rangy markets, it made sense. Because, well, I'm not going to go into my concepts right here, right now, but the idea is if the market is in a rangy market, then what you anticipate the market to do, so let's just clear this, what you anticipate the market to do in a rangy market is bounce from the top and bounce from the bottom. So what I will be looking for here, let's say now I wanted to trade the 1 minute time frame, I'll be looking for the area where price reacts to, which is this area here, the area in the market where price will more likely react to, which is this area here because of the wick rejection. And because it's in a range where price is not breaking the highs and has not yet broken and closed below the lows, what I will be anticipating is for price to bounce off of the low. So when I'm trading the 1 minute time frame, I'll go down, I'll mark that area where price has created that previous wick rejection, which is this area here, and then the same process. Okay, this is the exact same process, traders, exact, nothing changes for me. Okay, so this is what I'll be doing. I'll be saying to myself at this stage, okay, cool, current behavior of the 4H candle is bearish. This is the area in the market where price can react from because, and let me give you the because now. Because in a ranging market, what does the market do? When it comes to the top, it bounces. When it comes from the bottom, it bounces X, Y, and Z. Okay, this is what happens in a range. So this is my thought process when I came into the market today. If it's ranging, I'm going to sell from the top, buy from the bottom. If I hadn't taken that trade and I was at my charts attentively looking and I identified this level here around 34.40, I'm looking for the exact same pattern. So I'm looking for price to create a behavioral pattern which resembles a shift in behavior. So a level in the market where price has created a strong rejection. The behavior here now illustrates to me a breakout, break back in, which is depletion in bearish sentiment. Then I'm looking for supporting evidence with candle formations, i.e. wick rejections, indecision candles, bullish engulfing candles, and then I'm looking to take the trade. Now, what I have in the back of my mind when I'm taking a trade where I know that the 4H candle is bearish, so I'm taking it as almost a reversal of that 4H candle's behavior, is that the market can always come back to a previous level in the market and turn bearish. So in an instance like this, I make my mind up that I'm not going for a 2R, 3R, and you can, but more often than not, it's a 1R or 1.5R back to the key levels, and we take many of these on the live trading session, but we mainly do it on gold. But this would be the idea, and I'll tell you the final thought. The current 4H candle has already pushed bearish. Okay, when the 4H candle has pushed bearish, it means that it's met its range. Now, I'm not going to say that this trade cannot continue pushing bearish and that the range of this 4H candle cannot continue pushing bearish. 100% it can. But I'm not taking every trade with the conviction that I'm going to win every trade. I'm taking every trade as part of my plan. If I identify this behavior and it falls in line with these confluences, then I'm going to execute the trade. I may lose today, I may win tomorrow, whatever, but this is just a process that I follow. Once the 4H candle has pushed its range and it now taps into a very important level in the market, there's a very high chance that price is going to react from this level enough just to retrace to about 50% of the whole push itself for me to be able to take advantage of the behavior, which is a key level where price is broken out of and broken back into, creating a depletion in that bearish sentiment, and then illustrating that bullish sentiment with either bullish engulfing candles, pin bars, whatever you want to call them. I take this trade, or I would take this trade, mainly in gold, not knowing that it's going to win, but with the idea that price will potentially retrace that 4H candle and then go bullish. Okay, so if I was to take this trade, this would be a trade that I won. And for anybody that would say, oh, this is hindsight, listen, we trade live every single day and I take these trades all the time. This is just a pattern I trade over and over again on gold. And all that has happened is that 4H candle has pushed its range into a major key level in the market, into an area where prices reacted to previously. It's created that behavioral pattern that I'm familiar with, which is a breakout, break back in, and now I'm only anticipating that 4H candle to retrace 50% of its previous body to hit take profit, which is a 1.5R. If you go back, you will see what I mean here. The low, the low of this candle, the high of this range, 4H candle pushed strong in comparison to the range of the previous candle. So let me just prove this to you. Range of the candle, compare it to some of the average candles here. Okay, we now have a candle that's met its range. The idea is once it taps into this level, as long as I have a confluence in terms of pattern, which is a breakout, break back in, some sort of depletion, and then bullish candle, I'll take the trade in anticipation that price will retrace to around 50% of the previous candle, which will then give me my take profit using the 1 minute time frame. This is how you connect higher time frame analysis with lower time frame analysis, and that's it. So if it's rangy, I'm not saying you have to go that technical, but if it's rangy, sell from the high, buy from the low, or just stay out. So good choice there. Tracy, can you make some videos about a mechanical part of trading? I mean, I think I do enough of that, but sure. Rox, I've never been in your academy, but I must say your videos are gold. Thank you. Thank me later. Thank me later when you become a millionaire. Mark Douglas Trading Workshop is 4-hour series. Yeah, go watch Mark Douglas Trading Workshop. Blessing is blessing you. Go and watch Mark Douglas Workshop. Whatever floats your boat. Hi sir, Rox, I'm inspired. Keep up the great work. So any books, advanced price action? I don't read any trading books, Mike. Any trading books. I read these books. These books. These books. These books. These books. No trading book. No technical analysis book. No secret entry technique book. No ultimate candlestick pattern formation book is going to make you a good trader. Master yourself first and achieve whatever you want in life. Believe me. Stop reading trading books. They're trash. Everything works in back testing, but then forward testing loses. Yeah, that's all you. It all boils down to emotions. I know it's broad and boring saying that, but it all boils down to your emotions. So again, work on yourself. How do you understand current strike weakness? I've posted so many YouTube videos on it recently. Go and look back on some of the old ones. Hi sir, why don't you trade with footprints and order blocks as what institutions do? Who told you institutions do that? Who told you? What person from the institutions came to you and said, I trade order blocks and footprints? Copy me and learn our secrets. Who told you that? Further to the point, if you learn what institutions are doing and you believe in it, why are you asking me if you have that much conviction that that's what they do? Because if an institution came to me and told me their secrets, believe me, I wouldn't question it. I'll just get on with it. But seriously, who told you that's what institutions trade? And again, even if it is the thing that is working and it's a secret source and that's where all the hype's at, I'm telling you still, it's not going to save you. It's not going to save you. It's not going to make you a good trader just because you know where to enter, because you know where the orders are sitting. It ain't going to make you a good trader, believe me. Hey Rox, is it okay to take trades when the 4H candle was about to close but the market has already given you the patterns you're looking for? No, I wouldn't. If the 4H candle is about to close, I think that's your answer. It means stay out of the market, wait for the new 4H candle. Look, what is the rush? If this candle, let's say, is reacting at this key level here, it's gone bullish and failing, starting to turn bearish, what you're going to find on your lower time frames is a breakout. Oops. What you're going to find on your lower time frames is a breakout and a break back in with a strong bearish momentum candle. If this candle has 30 minutes or 45 minutes to close, why would you want to enter this candle when you know that the previous behavior leading up to this has been bullish? That means you're trading against the behavior. So what you need to do is just be patient. Let this behavior here, which is this candle, validate itself on the new 4H candle open, and then wait for that shift in momentum for price to create that new pattern that is now a confirmed new downtrend with a low high retest, and the current 4H candle is pushing bearish, which also aligns with what you believe to be the new movement or the new direction, and then enter the trade there. Now some people are like, it's a late entry, you didn't get it at the top. I'm just tired of it. I'm just tired of it, guys. Who cares if you get it at the top? What are you doing? I mean, why are you trading? Why are you trading? Do you understand? You're trading to make money. No one cares if you get it from the top. Social media glorifies sniper entries and all of this and all of that. Let me tell you something. Before these new things came out, it was all about sniper entries. Now you don't really hear anybody talk about sniper entries. You talk about everybody here talking about all that other stuff. But yet people are still struggling with the same things. And then guess what's going to happen? In another year, there's going to be something else. In another year, there's going to be something else. Again, what's it boil down to? I know you guys probably don't like listening to me say this, but figure it out. Figure what you want and just take the trades, man. Make money. And that's it. I can promise that I reckon 90% of you will be 100 times better than you are as traders if there was no social media. Believe me. You'd have no distractions. You create your game in your mind based on your beliefs, intents, perceptions, and rules. I agree with that. I'm from Southern Africa in Johannesburg. I'm grateful to have come across your YouTube channel. I'm really happy to hear that, my bro. Do I trade stocks? No, I don't. Just have no time to wanna invest in that, to be honest with you right now. Do I know Michael Huddleston? No. I wonder how long I can be with your one-time membership. I don't understand. I went through these 4 videos last weekend and boy, it totally changed my trading psychology. Isaiah, good. Oh my God, why is FOMO so hard to overcome? Because you don't have a strong enough reason to avoid it. That is why. And to control it and manage it. You just don't have a strong enough reason. You just want to be a trader, Linda. Hey Rox, do you know... I'll answer that question. Who the hell is this guy? Michael Addison. Okay, what's the best broker? Don't know. How do you decide where to place your stop losses? Hi bro, love your videos. How long do you spend on your trading desk daily? I'm here about 10 hours a day, but I'm not trading. You don't need to be first one in the markets, not at all. If correlation sometimes works, sometimes don't. Correlation always works. It's just sometimes a trade won't win and sometimes it will win. But correlation is probably the key ingredient to your consistency as a trader. Okay, let's start wrapping this up. Do you use Trading Assistant on MetaTrader? No, don't know what that is. I'm sorry. Trading is all about doing one thing over and over. The moment you start deviating and trading the smallest of variables, you start to get different results. Absolutely. Does life get boring once you're rich in everything else? Yes, it can get boring. Social media is very distracting. Just like you have to work on your trading, your discipline, your patience, and everything else. Once you get over that and you start to become consistent and profitable and everything else, then you need to start working on your life and spicing that up in your relationship, in your day-to-day life, in the activities you do. Man, you guys think that every day is just going to be a fantastic day and let's just skip through it because have money in the bank. I mean, there's no point talking about, you wouldn't even understand what I'm talking about here, but you do need to work on your life as well. You need to spice it up. You need to do things. You need to, what is the word I'm looking for? Doesn't matter. Can't remember. Okay. But yes, it doesn't get boring. You just have to figure new things out and be a bit more adventurous. Hi Rox, love your YouTube live shows. Can we get more live shows, please? Yeah, if we get more likes, we'll get more live shows. I mean, there's like been 1,000+ people on. We've got 215 likes. You know, it takes 2 seconds to press the like button for me. It does a lot more for me than you believe. It shares the message big time. If I'm trading 1 minute or 5 minute, where should I look for higher time frame confirmation? Okay, good question. If you're trading the 1 minute time frame, use the 15-minute time frame. If you're trading the 5-minute time frame, use the 1 hour time frame. I've always and I've never stopped speaking about this. If you're trading the 4H, scale down 2 time frames to the 15-minute. If you're trading the 1 hour, scale down 2 time frames and trade the 5-minute. If you're using a daily, scale down, use the hourly or 30-minute. Always 2 time frames thereabouts below your entry time frame. Do I do one-to-one mentorship? No, I don't. My trading strategy is good, but my psychology sucks big time. How long did it take you to become consistent profit? Remember, not every day is a trading day. Social media marketing tells hype, but like anything, life is real. Yeah, that's very true. I'm a forex trader living in New Zealand. I've been blessed by your trading style. It has changed my philosophy and trading. Much respect to you, Rocks. Thank you for your message, my friend. All right, guys, I'm going to start wrapping this up now. Many traders are looking the biggest art and they end up losing. I've been there, tried that, doesn't work. I urge traders to trade after a confirmed behavior. No, I agree with you, but I just urge you to figure out what it is you want from the markets and just go in, get it, and come out. Let me just explain something to you. Everybody here works for, let's say, look, we're going to be conservative, 500, 1,000, 1,500, and let's say for some of you rich people, 2,000 a month. Okay, now you work a whole month. You work a whole month for this salary. Okay, a whole month for this salary. And at the end of each month, what happens? Half, at least half of your salary goes to your rent. That means for 50% of that whole month, you were just working to pay your rent. If we think about the hours, that usually equates to about, let's say, 40 hours a week, 80 hours in total. To pay someone else 50% of your salary. And that person is living good because they have not had to invest 80 hours to get half of your salary at this stage. But then you come to the trading markets and you make 50 bucks. No one's happy. No one. But to make that 50 bucks, you've only spent 30 minutes to make it. 30 minutes. Okay? Now, if we figure this out, let's say you're earning £1,000 and you're working 160 hours a month, 40 hours a week. Okay? That means your hourly rate works out to be about, I think it's £6.25 an hour. Okay? £6.25 an hour. You've just made 50 bucks in the market in 30 minutes whilst you're slaving away to make £6.25 every 1 hour. So now you've just 10x'd your money by trading for 30 minutes versus what you slug out at your 9 to 5 to ultimately and harshly have to tell you the honest truth, to pay 50% of your 80 hours to your rent, but you're not satisfied in making 50 bucks in 30 minutes. Whereas at work, you're happy to work 10 times harder for it. Now, if you think about this, the way you make more money is to simply do this more often for long enough. And simply accept that sometimes, guess what? I will lose and sometimes I will win. But ultimately, if I stay focused and I keep on going, I don't know when, but if I keep on going, let's say, and I like to always do this, by the end of the 20 days, your hourly rate on average might be around, let's say, $30. And now, if we take that $30 based on your average for the month, no matter how many losses or wins you've taken, as long as you're consistent with your plan, and we times that now by the 160 hours that you normally work, you now go from £1,000 salary to a $4,800 salary. And you know the only thing that you've done different here in this scenario is you've accepted the power of this versus what majority of you are slaving towards. So now when you have to pay your £500 for your 80 hours of work working your 9 to 5 to your rent man, and you take away that 500 from that 4,800 that you've made this month with the least amount of work, I'm sure most of you will be super happy to take home this. But guess what? When you make 4,300 or you're up 4% or 4.3% on your challenge, guess what? It's insignificant to you. Because guess what? Everybody's driving a Lamborghini and a Ferrari and wearing Rolex watches and hitting 20 Rs on their institutional trading strategies. I'm not shitting on it, but I'm just saying, put things into perspective, guys. And once you do that, your life will change. Believe me. Until you get a taste of this first, you are not going to be able to get anything more. Believe me. So that's me, guys. I'm wrapping up. Sorry I wasn't able to do any analysis, but I appreciate you joining me. And yeah, I hope you have a good day. Take care now.